On this episode of Pounding the Table, we'll be discussing the most important news, a look at which companies are going to benefit the most from AI, up-and-coming earnings from CrowdStrike, SentinelOne, Zscaler, Salesforce, and Qualcomm, and take a deep look into the phenomenon that's resurfacing around go woke and go broke. Let's get into it.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We read
call out this idea of woke capitalism.
There will be fewer and fewer jobs that a robot cannot do better. That's simply and I want to be clear that these are not things that I think that I wish would happen. These are simply things that I think probably will happen. And
consumers don't want politics with their product.
Ladies and gentlemen, welcome back to Season 3, unofficially Episode 76 of Pounding the Table. We explore the intersections of business, stock, and crypto markets and discuss the news from the past week. It is, of course, Memorial Day weekend. We are back in the booth after a much needed 3 to 4 month window here where we took off, Joey, but welcome back. It is Saturday, May 27th. Obviously, a lot of news has happened in the past few weeks, few months. I sent you over about 100 different headlines, and starting here with the U.S. debt ceiling. They just moved that back from June 1st to June 5th. I think that gave a little optimism.
It definitely helped calm people because now, they were getting some slack for taking this long weekend. Everybody ended up leaving, going on vacation. They're like, well, how could you do this with the deadline being on Thursday? So this pushes it back. So they've got all next week, that weekend, and then, June 5th being a Monday. So yeah, it did buy them some time. It did help calm people, and it could be what helped us, sustain somewhat of a rally in tech at the end of this week.
Ron DeSantis announced his 2024 presidential run live on Twitter. Heard there was a few hiccups. I just saw the highlights. I wasn't tuning in live.
They had so many people trying to jump on at the same time. It kind of crashed things. So it's a very good problem that they had. And I find it funny that people are trying to trash it, that it was some disaster. Now it seemed like it was very scripted for DeSantis and it wasn't just like a natural speaking, but I mean, look, the guy just announced his presidency. Of course, there could be some nerves that go into it. But I think the funniest thing to come of it is Trump's social media team is second to none. And I've been seeing nonstop retweets. Donald Trump Jr. So, Donald Trump hasn't really come back to Twitter. I've heard rumors that he's going to come back just to help amplify his campaign. But Donald Trump Jr.'s Twitter account is just absolute gold of these videos and memes, just absolutely trashing Ron DeSantis. And I mean, I don't know which candidate I'm going to be supporting or anything like that along these lines, but I got to say it's very entertaining just to see how creative they can get and how quick they act. It goes back to when Trump was originally debating and he assigns these nicknames to people that just absolutely stick. And just to see how they're doing it again and how fast they're doing it. I don't want to call it impressive. It's just funny how fast they've been acting on it.
Yeah, this happens every primary, right? And it's so funny. Politics as usual. Every single primary comes up. All the candidates hate each other, and then they're on stage, and then they pick them as their running mates. So enough about politics for now. We're going to get into that a bit later with everything that's happening. Back to tech. For Apple, they extended a multi-billion-dollar deal with Broadcom over 5G parts with chips. Netflix alerted customers today that no more passwords. So no more Netflix and chilling. It's going to be $7.99 a month. That's been in talks for quite some time.
They've been on a heck of a run. And literally, I got a text this morning from my mother-in-law saying that, she had to update because, we all share the same account that my in-laws use. It was just like an added fee to add more households. So, it's still a pretty good deal if you add households to your membership, but it's definitely going to work for Netflix because there's nothing more annoying than I've got 3 kids with these Amazon Fire devices. We've got all our TVs. So it's not as bad or I guess as annoying as people thought it would be for Netflix. And they also had a very strong pickup. I think they said they already had 5 million people using their new ad-supported program.
Well, realistically, with how easy it is to pay family members with Venmo and Cash App, that was the kind of intention what they did over the past several years, knowingly that people were doing this. So whatever happened with their gaming sector?
I do remember them, saying that they were going to make a big push into gaming. And the last headline I found was from March 2023 saying Netflix set to release 40 video games this year and a total of 70 are in development. I don't know if anything about that has changed. A lot of companies over the last couple of months have been reducing spend in certain areas or completely selling off units like Facebook or Meta, unloading the acquisition of Giphy that they had made and, taking a big loss on that just to unload it. So I'll have to see if there's, any update on that part, but I don't see how they could go against that just because they do need that new vertical for, high growth. But I remember Google tried to launch in this. I think Amazon tried to launch into it. It just hasn't been all that successful. So it might not be the right time for them to do 70 games, but
Roku's just sitting there, and I always wanted Google to acquire them. Netflix has been tied into them as well.
They've had a deep relationship for the longest time. Roku was a project within Netflix, but, they weren't going to support it. So the CEO ended up just like taking that as, as his side thing and turning it into an actual company. I don't think Netflix would do that. And I wouldn't want them to because they're this pure play streaming company. And by doing that, then they'd be in the hardware business and the margins would be significantly lower. So I would not want Netflix to do it. I could see Google or Apple or someone that's already in hardware or wearables that, have the manufacturing capabilities and relationships. But I just wouldn't want to see them. Roku, it's a great business, a great product, but it's not a great stock and not something I would want to be putting my money in right now.
I just think with the amount of data that Netflix has, being able to push that directly is a huge ad wing for them as they're starting to get into that space right now. Alphabet and Uber partner. So Waymo and Uber are going to be providing the product via Uber's platforms.
It's pretty amazing. And if you think, what's the big expense for Uber? It's the driver. So if you've got this autonomous thing that completely removes the expense of the driver, that is something that could be special, very high margin business. And Uber's already putting up amazing numbers. Like it went from just this cash incinerator into this amazing operation. So Dark, he's just absolutely turned that company around, and Travis was great, but yeah, hats off to Dara. He's put up a heck of a performance.
Uber is going to be on every single person's first screen. They are up 50%, 51% year to date. All-time high was about 60.
The other thing is, they're about to be a monopoly because you look at what Lyft is doing. They just absolutely horrible operation, terrible numbers nonstop. And now they've got plenty of money to be operating for quite some time. And I don't see Lyft just going away. I see someone buying them eventually. And you could see one of the other big automakers or big tech companies taking them out, just add that. That would be a cool thing if like X.com does come back like Elon Musk is saying, and you want something else to go with the super app, then Lyft would be a great feature to go with it. But that's all speculation. And again, you never want to invest in something based on a future acquisition. Like if that's how you think you'll make your gain. So the Lyft and how horrible they're doing, it just shows Uber is the bird. Even if you're going to take a Lyft somewhere, you call it Ubering. So it just shows, their dominance and just how great of an operation Uber actually has.
Meta is creating their own little Twitter. So Meta just feels like, even though their stock's been crushing it, all the news flow is so negative. I feel like every time you look up, they're laying off staff, which does help the stock price go up. But it just feels like bad news flow after bad news flow. But they're starting to launch this Twitter clone. You think there's any competition here?
I don't think it's going to last. So they do this. That's just what Meta does. If there's another feature that they could add, they did this to Snapchat. Yeah, they did it to Snapchat. They launched Hobby, which was a rival to Pinterest, which then they killed off. They launched the dating service, which was supposed to be the death of Match.com's group of companies. They just do this nonstop. And, some things absolutely take off. Like, their filters, Instagram stories, all that stuff has been amazing. But then there's other features like Hobby or something that doesn't pick up and they just kill off. Or, just like Giphy was a cool acquisition, but then they realized we don't need this. We'll kill this off and sell it. So yeah, the stock's been great. I just think, it got so undervalued. I mean, I want to say the market cap got down to being in the 200 billions, like upper 200s. And you look at just how much cash that company produces, just like the value of Instagram alone. Facebook still has 2 billion users. So their properties are still incredibly popular. I don't think they're even monetizing WhatsApp yet. And you think of the potential there. It's an amazing company and it's by far my largest position. So I'm not just trying to push my book, but it's one of those that people were like leaving for dead and it just made absolutely no sense.
We got to get into NVIDIA. Obviously, I think that was the news of the week. I mean, just this AI has been trying to make some noise and everyone's been whispering, going up to people at parties and being like, yo, you guys do ChatGPT. But we're starting to see things really take off. And NVIDIA, obviously a huge piece of what they do, as well as chips we'll be talking about here later. But NVIDIA, they didn't blow like crazy out of the water for their revenue, right? It was more of the guidance.
Yeah. If you look at the actual quarter, like it wasn't great, but that was all about guidance. Like their guidance beat expectations by over 50% on revenue. Like it was just amazing. It's all driven by, all these data centers updating everything that they've got in there to NVIDIA stuff. So it just shocked the world. And I was actually listening to CNBC going into the report. Everybody was saying the stock's had this huge run, it's so overvalued. You shouldn't be owning this. A bunch of people on Twitter were saying the same thing. And, it was just so overly negative. But as soon as that guidance was released, it was shock and awe. And that stock just absolutely took off. I want to say it added $180 billion in market cap a single day, which is just incredible. And it's, within spitting distance.
You rarely see that with these huge market caps. And
yeah, when you're talking total value, that's got to be one of the biggest days of all time.
I saw someone on Twitter. I gotta find who it was to give them a shout out, but they brought up a really good point too, because they didn't just guide like a little bit up, right? Which they could have done and then beat it again. So like people were saying, okay, shit, if this is what they're guiding with, they must know they're about to even beat that by a long shot too. So you saw it.
Yeah. Especially in this environment, people follow the UPOD method, under promise, over deliver. But this was a massive promise. So if that's the thing, if they're even going to beat this, that's going to be an amazing quarter and something to see. But like you said, AI is kind of like the big theme of the year. The other thing, the woke capitalism type movement. I mean, those are definitely the two big driving forces around the market right now.
Real quick, before we get into the go woke, go broke section of the podcast, AI, this is something, I think this was earlier in the week or last week now, but the AI fake image of an explosion in DC at the Pentagon, which was false, right? But that shocked all the algorithms and everything kind of sold off momentarily. Like this happened earlier too. There was an example of who's the company that
Costco's hot dog thing.
Costco's, yeah.
It was like a $13 billion movement. Yeah, it's amazing. And you think, it could be market manipulation. It could just be to shock the public. It's very interesting to see how they're going to combat this. But yeah, if you've got AI is so good. Like you see all the new features Adobe has with its Photoshop software and different AI features. Like you can create anything on top of real image, or it can create a new image entirely. Mm-hmm. So I have a feeling, there could easily be manipulation using this, and they could target specific companies. Just like in Costco's was just a funny tweet saying the price of the hot dog was going up and it moved it, where this was, something more about striking fear in the market. Like imagine if that explosion or the fake explosion would have been, like in front of the New York Stock Exchange or something. Mm-hmm. Like that would have been even more significant. But I mean, you can't really have a circuit breaker based on fake images on social media, but it's just a brand new challenge that's going to be put in front of regulators. And I mean, this is something where I'm glad I'm not the one that has to figure out what to do.
Maybe this is the use case for blockchain to show that it is authentic.
You almost need AI constantly analyzing to know if it's fake. The other thing is like, talking AI and AI generated text. I've actually used ChatGPT and then put it into one of those systems that tells if it's written by AI or not. And it straight up says this was written by a human. So like even the AI detection ones can't detect if it's AI. So that's something I've looked into being in content management and getting a lot of different work from freelancers, seeing their work is a lot faster than it used to be. Could this be helped by AI? And a lot of companies don't have any rules against it. But using these AI detection things and seeing, oh no, yeah, it's written by a human. It's like the AI is so good that it's written as if it is a person.
Apple is saying that employees cannot use ChatGPT, and a few other companies are starting to ban it as well.
It's going to be somewhere where companies need to accept that it's going to be there. Like, of course, you don't want someone, say it's like a copywriter, you don't want them just getting paid a hefty salary to then just type in, hey, write me, an ad on this. But it's like calculators in schools. I find it dumb that they're still teaching cursive and how to do things by hand when you've got these calculators. I feel like they need to just show these employees how to be more efficient using specific AI and maybe have less of a staff to do specific jobs and train a smaller workforce with AI.
Well, and that's always the fear. I went to an awesome conference by a co-founder I used to work with, Noah Breyer, here in New York. And obviously that's on people's minds, but he really started the whole conference talking about, hey, let's take a look at the positives of where this can be really an accelerator in our lives and in our workflow, right? Because if people can start to produce a lot more and better work, that does seem like a good thing. But then it gets into that, conversation about, okay, if one person can now do the work of 5 people, do 4 people not have jobs now, right? And
so you got to think with a remote first world, you've got a lot of companies, and I saw it firsthand at a company I used to work at where, they're hiring more people to do, the job of few because so many people are just off doing other things during the day, just not all that efficient at home. But if you've got something like AI that can make a single person more efficient, rather than having a 10-person team, you might have 2 people armed with AI that are doing the work of many. I saw something, someone on CNBC was talking, they were talking about how all these entry-level positions that are being replaced by AI and how that could impact like what the normal or acceptable rate of unemployment is long-term. But then you've got the other side. Okay, if the normalized rate of unemployment is X due to AI, then all these entry-level positions that are gone or entire industries that end up disappearing, will those people then move into a different field? Unlikely. So that's where then I saw like the very strong debate for, universal basic income and like these companies that are massively profitable, they'd have to almost use it to fund this. And then you kind of get into the whole socialism type sphere, which is not ideal. But that's how significant AI is when it comes to adding efficiency to organizations. So they can't ignore it, but you don't want to just have someone on payroll to have someone on payroll. So it's going to be interesting to see how it plays out.
This could be a tale of 2 companies here. Microsoft goes on to kick ass and everyone's doing 1.5, 2 times their speed, and Apple's not allowed to use it and their work's not as fast as, I don't know. It's very interesting to think about though, because these companies that have so much money, they don't want to get left behind. And when they have billions of dollars to spend and to throw at this for R&D, it's only going to get it faster. And it's almost like a war of technology that they're going to have to not get one up by this other company. So,
well, think about the headline that you even put. You put that Apple won't let employees use ChatGPT. What if that's just because they're developing something in-house or something in-house? And that's what they want them using Apple GPT or iGPT, whatever it is. Just like Google could come out saying the same thing, but they could all be using Bard and these other ones. So very specific, the headline that's in there. So it makes me think like, they're not saying they're not allowed to use AI. It's just ChatGPT. And that makes sense because why would Apple use a company that's then just feeding Microsoft? Because the feud between Jobs and Gates from the long term. So that could just be why they just don't want something. Because I've seen a lot of bad deals in my time. So, Microsoft put a total of $13 billion into OpenAI and they get 75% of OpenAI's profits until they recoup their $13 billion, but then they remain, owning 49% of the company. So to see how fast ChatGPT has taken off and how big OpenAI could get, that's a pretty sweetheart deal for Microsoft. And I think long term, they just acquire the rest of the company. But it's very interesting to see how great of a deal Microsoft got and how early. Then you look how OpenAI was founded as a nonprofit by like Elon Musk and some other people. And now it's a for-profit So it's very confusing, but I mean, here it is and it's not going anywhere.
Other big news, obviously, of the week, Target, and before that, even Bud Light. Been on Twitter. You've probably seen the hashtag Go Woke, Go Broke. A lot of companies have been moving towards social equity, focused on ESG, and we're seeing the stock take a hit and kind of do the inverse of what the intention was, if that is the intention, right? So are companies actually doing this because they believe in it, or are they doing it to ultimately make a dollar? And we can see this with Bud Light. They initially lost like $6 billion the first few days. I think it's up to $15 billion now that they've lost. Target recently lost like $10 billion, and that's more recent, right? So that could continue. And it's very interesting. You've seen this happen throughout history. We had Nike back in 2018 with the Colin Kaepernick. Pepsi did something with like giving a Pepsi to a police officer, and they got like backlash. Like Jennifer said basically companies should just kind of stay in their own lane. Because there's been a lot of videos on Twitter, a lot of people causing commotion on both sides you were talking about.
Yeah, it's not a good situation for companies to try to, I mean, they could try to be doing good. I feel like, anytime any specific campaign is chosen, they think they're doing the right thing. But I think all companies need to realize, like, they have a fiduciary responsibility to their shareholders. They don't want to go off and anger a specific group of people, whether it's small or big, anything like that. I feel like Michael Jordan had the best stance back when, he wouldn't endorse a specific political candidate. And his reasoning was Republicans buy Nikes too. And I mean, that's genius that even looking back on that today, I mean, a lot of these companies are getting a lot of slack. And if they reverse their strategy because of the backlash, then, the group that felt like they were supported by the move, then got their backs turned on them. So it's not good.
Yeah, it just happened with Target. They pulled everything off initially as well.
Like the flip-flopping seems to have made it worse. And then you see, the stock, I want to say it just hit a new 52-week low on Friday. It's not a great situation to be, in the headlines and then out of nowhere have like a song about boycotting your store in the top 10 on iTunes. Like it's pretty extreme out there, and I don't envy that position, but I think other companies will take notice and think maybe social issues aren't the ideal place to try to not even pick a side, but like, play into specific. Yeah, there's no good way.
Yeah. It's obviously a touchy subject, right? And no one wants to talk on it. And so maybe we should stop talking on it, but it's something that's happening.
It's impacting stocks. So it's worth mentioning. And like, keep an eye on your companies.
Let's bring it back. We got a few questions here from the audience. Each week, you guys can DM us questions throughout the week, but we'll shoot an email. So if you guys are not following us, go to poundingthetablepodcast.com and sign up. You guys can shoot us emails with some questions. So first one comes in from Danny S. in Miami. He said, I saw NVIDIA and the chips have been absolutely flying, understandably. However, it seems like Qualcomm's taking a little bit of a laggard. They do have the most exposure to China, but is there other reasons?
It definitely seems like an undervalued company right now. When you look at, just about every chip stock has taken off. Thing with Qualcomm is it's directly tied to Apple. I want to say 20% of the revenue comes from Apple and, iPhones and all the technology that's in there. I don't see them as one that has like a huge play on artificial intelligence, like an NVIDIA or even Marvell Technologies took off last week. But yeah, I thought because like all semiconductors and everything related to it have been taking off, that Qualcomm would have been one of them. But, it definitely hasn't. So it's one that I'm watching closely and was debating throwing out a position this past week, but didn't. But maybe earnings and something, maybe if they say the term artificial intelligence 77 times in their earnings release, then it will get people to, see it as one of those plays. But as of now, it definitely seems to be left out of the pack.
Saw on the Nancy Pelosi ticker tracker on Twitter that the ranking vice president of Foreign Affairs Committee bought $45,000 of Qualcomm, which is public information. She's on the Foreign Affairs.
Yeah, those trackers are always fun, but then I look at how like Pelosi had sold.
Everyone was giving her so much shit. Maybe she's like, you know what? I'm going to fake one so they get off my back.
Take a couple losses. It's like, when you, if you have all the answers to a test, you got to get one or two wrong. And that could be why.
It feels like for the first time in a long time, people are starting to want to put money back in the market. And it's always one of these funny things that they see the stocks go up and then they want to get into it. So we got a question from Steven in Vermont. Steven is asking, is this recent growth in the market sustainable, or is it just a fake out?
I mean, only time will tell with that. It's really hard to
Come on, it's too
play the market direction game. I mean, it's already been what we've been rallying like since October. I saw something like 200 something days of a rally. I mean, it's been nice to see some big names move up. But then I also heard someone say that 118% of the gains in the market this year are driven by 8 companies. And I want to say they just mean like the S&P 500. It could just be the NASDAQ when they're talking about it, but it makes sense. That's going to be Microsoft, Nvidia, Meta, all the big players that are driving all of these gains. So a lot of companies haven't made all that significant moves, or, they made significant moves, but the market cap in the weighted index just is not significant enough to actually be much. So yeah, it seems like the mega caps are leading all of this, but valuations definitely seem more reasonable than they were. I think the selling just got overdone, and this is the market normalizing itself, while specific names are taking off, like your Nvidia and Microsoft, driven by AI. But in the same breath, AI definitely feels like it's getting a bit extended to where it's very metaversey, where, everybody's entering the metaverse and their stocks are taking off based on that. So it's very important to make sure you're only investing in legitimate players within the space, not someone that just, like back when we had blockchain or something taking off and companies were changing their names just to have the word blockchain in it. Like, look for those established players that actually are doing something within the space, and then check the valuation and see, okay, does this have room to run or does it not? And one of the big spaces I've been seeing is cybersecurity, where a lot of those stocks are up significantly from their lows, but are still very attractive on the valuation front.
Yeah,
so I would say, based on where the market is, it could, but it's still very much a stock picker's market. So you got to be very picky with picking your horses.
We got a question here from Big Berman out of LA. Big Berman is asking, the stock market over the past 18 government shutdowns had very little impact. Why is everyone talking about this one having more impact if the debt ceiling does not get raised?
So that is a very good question. And there is a difference between a government shutdown and a default. So I would point you, Google some valuable sources or some reliable sources so you can see what the difference is. But there has been 4 government shutdowns. I want to say it could be 5 over the last 30 years, but the US has never defaulted on its debt, meaning failing to pay its bills. So that's why they're looking at this default as something like we just can't do. And I definitely think that they'll reach a deal, because it would be catastrophic if they didn't. So both sides, Republicans could try to want to make the Democrats look really bad because they've got the president in office, but that would mean screwing over like all Americans in doing so. And I don't think anybody really wants that.
It is kind of funny, the whole debt thing. They're like, all right, we owe $1 trillion or whatever.
It's all fake money, and it's ridiculous. It's like, you're already $30+ trillion in debt. Like, you're never digging out of this hole. You could print your way out of it. Inflation's already out of control. What's printing more? And that's the other wild thing. It's like, oh, you want to pay your bills? It's like, you're going to just print more money to do it. So I don't know. It's funny that we even have a debt ceiling, but it's also comical that we have this much debt.
Love the questions, Pounders. Keep them coming. Send us a DM or shoot us an email at host@poundingthetablepodcast.com. God, I sound like a radio host. Let's move into earnings for next week. So nothing really big Monday or Tuesday. Obviously, Monday, the market is closed. Happy Memorial Day. Wednesday, we got some big ones, though. Salesforce, CrowdStrike, Okta, C3 AI, Chewy, another name we haven't really touched on. And then Thursday, we got Zscaler, Broadcom, Lululemon, MongoDB, SentinelOne, Asana. So we got a lot here going on with cybersecurity. I think that is the big focus for Sentinel One, Zscaler, and CrowdStrike coming up.
Yeah, that's definitely going to be the theme of the week. And Palo Alto Networks reported recently, and it was an incredible quarter, very strong guidance. So that kind of got people pumped up about the cybersecurity space. CrowdStrike and Sentinel One both, they use the AI term quite a bit when they're talking about, their technology and their platforms and how they combat cyber attacks. So I'm surprised that those haven't been pushed more on, like the rise of AI. But I own both of those, both CrowdStrike and Zscaler, because, I've owned CrowdStrike for years, but Zscaler a couple months back, as it crashed like below 100, the valuation made perfect sense. The cash flow is very strong. And then they already kind of upped their guidance for the current quarter. So that's why the stock rebounded from upper 80s to where it is now, like around, I think 120, 130. So now they just need to, beat what they had said and then give strong outlook on the rest of the year. And that stock could continue to take off. But because of Palo Alto, CrowdStrike, and Zscaler, I'm looking much deeper into Sentinel One. I traded it over the last 2 weeks, but, haven't held on to it. But it's one that, is still growing revenues. I think the outlook for the current year is over 50%. It was over 80% last year. And they're saying they'll be profitable in 2025. I don't know if they mean like a single profitable quarter before becoming profitable for the full year in 2026, or if they'll be profitable for the full year 2025. I'll have to pull that. But that's another one where, it's a much smaller player than CrowdStrike and Zscaler, but the growth is very impressive and where that company could go. So I'm very interested to see what they say. And, Lululemon, they've just kind of been treading water, but that is by far, like the brand of millennials, to where I definitely think that's one that I'm hoping misses and tanks just so I can start building a position.
So Bard is amazing, by the way. I just typed in how many times was AI mentioned in the last quarterly earnings report for Zscaler, CrowdStrike, and Sentinel One. 25 times for Sentinel One, Zscaler 21, and CrowdStrike 10 times. So is it safe to buy stocks purely on how many times AI has been mentioned in their quarterly earnings?
I mean, that works for NVIDIA, but so I just had to pull it up. So Sentinel One,
that's cool. You can do that on Bard though. That's awesome.
That is pretty cool. So full year 2023, Sentinel One posted 106% revenue growth, and it was 92% in the fourth quarter. And their outlook on full year 2024 is calling for revenue growth just over 50%. So I was right on that metric, to where, yeah, it's a very impressive growth story over there, but they're still projecting non-GAAP operating margin of negative 25 to 29% in 2024. So that's the part where it kind of pushes me off. I like companies that are actually producing cash flow and on the profitable front, but you do see the path to profitability with that one. So getting in before that is ideal, but it's one that I'm going to be digging into quite a bit this upcoming week and on the earnings release. So at least this podcast will be published before any of those moves are ever made. And I do not own it right now.
Cybersecurity is a theme that's not going to go away, right? So is there any ETFs? I was just taking a look. It looks like
so the big one that I've always looked at is, it's ticker HAT. But I remember I had looked into it and I wasn't thrilled about like the allocations. So this is where I would say, if you want cybersecurity, build your own ETF by, buying the top players in it, which could be like, Avi, if you were building yours based on our conversations, yours would be like Palo Alto, CrowdStrike, Zscaler, and Sentinel One. Cause you like all four of those companies. And if you want to exposure to cybersecurity, but don't want to pick a single one, spread it across those four, create your own ETF within your portfolio, but
no fees then either.
No fees that way.
All right, Joey, that about wraps it up. I think we kept it closer to 30 minutes, which is something we're trying to aim to do this season. Big shout out to Genzio, who's helping us out on some of the social media and marketing pieces as well coming up. So this is awkward, man. I can't say so Tony. He's not here on this episode, but he will be back. But I will say, so Joey, what are your thoughts here heading into a beautiful Memorial Day with family and friends, of course?
I'm going to echo what I've been saying for like the last year, maybe year and a half, is even whether it's a good time in the market, like it's been of late, rocky like it was for seemingly 2 years, you've got to keep it simple. So, keep playing that KISS method, keep it simple, stupid, and keep doing your homework. The market seems like it's a lot better now, but it could turn on a dime. So just continue to put in the work. And as for this season, I definitely want to hear from everybody, whether you're going to tweet at us or email us. Let us know what you want to hear more of on the show. Do you want us to dive deeper into the headlines, deeper into the earnings, specific companies with catalysts coming up? Tell us what you want to hear and we'll mold it into the episodes. So, we become a show of the people like we once were.
Exactly. Everyone have a very happy and healthy Memorial Day weekend with your family and friends. And of course, keep pounding the table.
Make good choices.
This one here for all that try to count me out and they still counting. Honestly, I never doubt it. Say the top is never crowded. Well, I'm trying to climb the mountain till I need a few accountants. Stock is rising, perfect timing. I'm in Brickle with the tribe. Shawty sliding, she want sushi, she want eel sauce with a